the product-driven investor who focuses on innovation and sound financials. When this company hits, I'm gonna sell the shit out of it. Just kidding, guys. Full transparency, I'm gonna tell you exactly where my selling point is. But please watch the whole video so that you understand how I got to that value and why. I think it's really, really important for you to understand why I got to that number, why I think there's still potential for growth. And if you disagree with me, it's really important for you to understand why. This way you can refine it for your own speculation and also leave a comment, right? We're all trying to invest in companies that are trying to make a difference. And also the goals that we set ourselves needs to make sense. If this is the type of content you've been looking for, please hit the like button. Let's get started. The reason why I thought there's an upside in the first place is because they have 5 shows with a CEO who has created 5,000 different episodes on all of the major networks. So he clearly knows what's up. He's making a really, really smart play by being platform ubiquitous, right? He's distributing his unique content on all of the major platforms. And he's even moving into China, which is what I love to see. That's a huge market that most people struggle to get into. He's getting into it, right? He's going from 80 million households in 2018 to 1.2 billion more households in the APAC. He's also launching his retail business by partnering with Mattel and going into Walmart. And if you actually read the comments that the CEO has been putting out, they're expecting $250 million in revenue next year. That is startup-like growth. That is the type of stuff I want to hear. Yes, they are slowly diluting the stock, but for all the right reasons, right? And in fact, I think they should dilute. In fact, as a product guy, I actually think they should dilute the stock even more because we are in the beginning of a recession and he needs to fundraise to power through the recession if need be. It's going to be for the greater good if he chooses to dilute even more. But even without that, it looks like they're on track to doing all the right things. They're launching into more locations. They're creating Stan Lee's last show with Alibaba's partnership. Yes, Ali Picture is not really known for creating innovative content, but they're known to create products that has value. And therefore it's guaranteed that at least you won't lose your money, right? And they have enough money to tackle this problem, which is super, super important. Now the challenge is that when I said all of this, the market cap was around $300 million, and I was expecting the value to be built in over the course of a year. Just like the video I put out on Peloton, it kind of reached most of that valuation that I was expecting in the course of 2 weeks. That to me tells me that there are too many speculators in the market. The price is driven by mass hysteria instead of product sense, instead of the innovations. Unless there's insider trading, right? Unless people from the inside knows that they're actually going to go into India as well, where we're expecting to capture more user segments as opposed to incrementally growing the user segment in a significant way. There are 2 different concepts here, so I hope I'm communicating this correctly. But if I'm launching into Europe, a new station, then just like I did in China, I'm capturing 1 billion additional eyeballs, right? Versus what the company is already doing, aiming for, month over month growth. That is already built into the stock price. That has not changed. But if they mention a new partnership, then the instant growth makes sense. Similarly, there's obviously this gossip that, Warren Buffett knows this channel because he's on this channel. He might think that this is a worthwhile purchase. Disney might think it's a worthwhile purchase. I mean, if you actually look at Warren Buffett's portfolio, and if you look at how Disney make purchases, it's way too early. The likelihood of that is not anytime soon. The likelihood of that happening in the future is very, very likely. To give you a benchmark, right? Pixar was sold to Disney at around $60, I believe. Why would the CEO of GNUS brand sell anytime before that? It behooves him to hold on and build it out so that it has more value, even if Disney is pursuing them, right? Similarly, Warren Buffett only purchased things that are already cash flow positive, has the potential of growing massively also. Only one part of that is true, and that part is highly speculative. So you can imagine that both companies, they'll hold off, right? They see some potential here, and they'll hold off until it grows bigger. It behooves them. It's all about bankroll management, whether you're playing at a corporate level or our private investing level. So all of that being said, my first benchmark in every single investment I make is that, does the product make sense and does it have good product fit? What is their product differentiation? And lastly, would I work there? I'm a startup guy, so as a product manager, if the product makes sense to me enough for me to want to work there, then I will most likely invest in it. Then we look at the financials. Does the financials make sense right now in terms of viability as a business? And what is their projection? What is their long-term growth based on the product innovation that they have in mind, or the content creation that they have in mind? That's how I figure out what the valuation is. That's how you create a guesstimation rationally. So with all of that context in mind, I think the stock should be worth $15 to $20 a year from now. Right now, I think $10 is getting into the gambler's territory. I already see the thing retracting, right? And I'm frankly glad that my selling point was between $9 and $10. Am I gonna buy back in though? Absolutely. All right, guys, I hope this brief video proves helpful to you, gives you a little bit of insight, answers some of the comments that you guys have for me. To be a shrewd investor, you have to leave FOMO out the door, right? To be a shrewd investor, you have to leave FOMO out the door. To be a shrewd investor, you have to leave FOMO out the door. Even if you think you made the wrong call, you should analyze why you think that, right? If there are rational reasons why you made the wrong call, then that's something you can fix. But if the stock just went up or down for no reason that you can tell, that is irrelevant to the picture. We're looking for consistency and proper bankroll management. Anything outside of that, you're gonna tear your own hair out based on the stress and adrenaline rushes that you're constantly gonna be getting trying to make the right play. That's not even speculative investing anymore. That's just pure gambling. As part of the 11th community, we're built on knowledge and the idea that there's enough room for all of us to win. So leave a comment if you have any questions or concerns. Leave a comment if you have any knowledge that I missed out on. The community can benefit from all of this. Thanks for watching. I hope this was helpful, and I look forward to working with you next time.